Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of the S&P 500, ticker symbol SPY. I've also got a couple short ETFs up there that I will go over because I do think it might be a very excellent time to be shorting the market, or at least building short positions. And I must say that I did start the year with a video talking about shorting the market. Let's see, January, it was right around here. And I have to say I was a little bit early with that, but following yesterday, August 5th, I closed some short positions, took some profit when everybody was panic selling the low before we bounced. And so I just kind of wanted to go over my thesis why I think now it is, an even better time to be building short position because, I was early. As you can see here, the SPY did go up from when I started building that position. But since I was slowly dollar cost averaging and building that position, I did make some money on that. And so I will share that towards the end of the video when I go over shorting semiconductors, because I think that's actually the best kind of trade to be building a short position. But I first wanted to go over my thesis, with the top being in for the stock market, the S&P 500, and this being the beginning of a bear market that will have bear market rallies, dead cat bounces, whatever you want to call them. So I think there are going to be a lot of great opportunities to make money on the upside. I do think that right now, if we zoom in, we're seeing a little bit of a bounce there. I think that's what we're seeing, just like we saw over here, a dead cat bounce where we get to lower highs before lower lows. And so with that being said, while price is going up, I think it is a good time to be averaging into short positions. But before I get into that, I did want to throw up some drawings here so we can look at, my thesis and why I think that we have started a bear market with the S&P 500, or the SPY here, hitting a high of $565.16 on July 16th, and why I do think that we will be seeing a bounce maybe over the next couple of weeks, maybe over the course of the next month or two, but I think that we will ultimately be making lower lows on our way down. And so here, the drawings that I have up here, I'll go through all of them. I guess the main one that I have drawn up here is this Fibonacci retracement going from the low that was hit on October 27th of 2023. By the way, these are the daily candles. And the low on that day was $404.99, and then going up to that high that I had just mentioned, which was hit on July 16th. And so from that, we have a number of levels to the downside. And so, with this retracement being from the bottom to the top, these are levels that we might be finding as support on the way down. And, we did just get a bounce. It doesn't necessarily correspond to any of these levels, but it is approximately lined up with the 382 here, right around $500, that being at a price of $503.98. We did hit a low on Monday, August 8th of, let's see, $510.27, so just above that level. And with that, I have drawn this purple uptrend, which you might recognize what kind of pattern we could be forming. I think that we're putting in a head and shoulders pattern where we have the left shoulder here, head here, and that we may be forming the right shoulder on this, dead cat bounce or bear market rally that we might be seeing over the course of, really the next month or two. I have this high here, just being a doodle drawn at the end of September. And that was actually based on a previous Fibonacci retracement I had drawn, and I actually adjusted it for this video. But these bounces are really just approximate. And with that being said, I do think that we will be seeing a series of bounces that could be bringing price down to around $460, again corresponding with some Fibonacci levels. And so other levels on here that do stand out, maybe we find a bottom above 460. One is the 50% retracement at a price of $485.07. maybe we do find a bottom there, but I don't really see any levels from the past that could be suggesting we'd be finding support there. So I don't really think that is going to be a level of support. And what does stand out to me as levels of support, I have 3 of them drawn up here in color. One is, as you can see here, this red line at a price of $453.10, or right around $450. That was the high hit on July 27th of 2023. I also have this yellow line here drawn at 462.31, and if we take a step back in time, we can see that that was the high going back to the beginning of 2022. And so with both of those being pivot highs, I think we could find some support there. Also, from the Fibonacci retracement, I not only have the 618, but I also have the 65% retracement, because that range is the golden pocket, ranging from about $461 up to $466. That does correspond nicely with that prior high marked by the yellow line here, but maybe we dip below those levels and maybe we get to this red level. If in case we dip below all of those, I do have the 786 up here at a price of $436.27, or right around $440. And so, I could see any of these levels being the bottom. And one thing you might notice, I also have this orange uptrend. And so that is based on 2 pivot lows, one being the pivot low from the pandemic, and the other one being this pivot low from October 13th of 2022. So if I just connect those 2 points, we get this uptrending level, and it converges, with all of these lines that I had just gone over. And so I feel like the SPY could be coming down to between around $450 and $460. And one thing that I find really interesting about that, I had mentioned this head and shoulders pattern. One thing we can do with head and shoulders patterns is take a measured move. So going from the top of the head to the neckline, and then whenever we break, we could get an idea of where price could be going to. So just taking a measurement from the top of the head, going straight down to that neckline, we can see that that is a downside move of about $60. And if I move that measurement over to where we might be breaking that neckline, that brings us pretty nicely to right around $460. So I think that, it's not just one level, it's not just 2 levels, it's a number of measurements, it's a number of levels of prior support that suggest that price could be finding support down in the 450 to 460 range. And as we do bounce, I think, like I said, it could be an excellent time to be building a short position. And I think that the turnaround is going to be much shorter than, the 7 months that we've seen over the past year of me building short positions. I think that we might be seeing, gaps down, dips down to these levels, in the coming months. So I think it could be much more profitable much sooner by building a short position. And with that being said, I am going to go over ticker symbol SPXU. This is a 3x leveraged short S&P 500 ETF. And so I think it can be a very nice way to be shorting the market, building as we do see this come down. And so levels that stand out to me that could potentially be support, really they are all gap fills. And so one is the gap from Friday's close, which was at a price of $30.87. But we do have some other gaps to the downside. One being $29.21, which was the closing price on August 1st. And so there is another gap that does need to be filled. We also, have this gap here, however, that was filled, so I'm not paying attention to that. But at the very bottom here, we did close on July 16th at a price of $25.95 before gapping up. So that is another level, although I do think that, that's being pretty greedy, because that would be suggesting that we will be putting in new all-time highs with the S&P 500. I don't really see that happening. I think that the top is in, as I do think we have entered a bear market. And then another level that I do have marked here is this yellow line, right around $30, marked here at $29.97, that being the closing price on July 25th. And so, while we might fill this gap, I don't know that we would fill this one because we might be finding support here. This prior resistance may become support in the future. And so I could see reestablishing a short position at the range from around $31 down to around $29. I think that could be a really nice dip buying opportunity. If it does go even lower than that, I think that's even better because I do think that we will be getting higher than the high during market hours that was hit on August 5th, which was 34.86. So I think there's a lot of potential to be making money on this. And so, while others are panic selling, one could be taking profits. And so I think that this is a very nice way to be hedging the market. If you're long positions, that's great. I think that's fine. You do you, whatever you want to do. But I do think that this can be a nice way when there are panic days to be making some money. And so, the next ticker that I want to go over, which I am really excited about, that is going to be ticker symbol SOXS. This is 3x leveraged short semiconductors. And, this is the one that I have really been more aggressively building over the course of the past year. And if we do take a step back, the beginning of the year was right around here where we have the high. And, I was suggesting that on these dips, good time to be, building a short position on semiconductors. And I was definitely early with that. But I made profit yesterday. I took profit yesterday. And, I don't usually do this, but for this video, I'm going to go over my P&L, which is, in all honesty, not that exciting. I'm kind of a small fish. I didn't make a lot of profit yesterday, but I did take some. And so if we look over here, we can see this is my SOXS position for the year to date. I made $136, not crazy. Like I said, I'm not a big fish, but over the course of the year, I was slowly dollar cost averaging, building a position. I was negative about $200. So, at that time, I was actually not adding. I had lost conviction in this play, and I was expecting, if I can just break even, I'd be happy with that. But I actually ended up making profit because I looked at some of the technical levels that I will go over. And so while I was dollar cost averaging over the course of 7 months, I was able to make money on that. I think that dollar cost averaging now over the course of the next few weeks, maybe next couple months, I think that more gains could be made, and I think that the drops will start to be more aggressive. So I think the dollar cost averaging can be more aggressive moving forward. But anyways, I just want to go over the levels that do stand out to me and that really, kind of informed me on why I was able to take profits rather than just break even. And so there are a number of levels, again, here on the chart. One of them being this Fibonacci retracement to the downside. So going back to the highs that were hit on April 19th, that was a high of 46.30, and then coming down to the lows that were hit on July 11th at a price of 17.76. So, like I said, I wasn't really adding, or at least not very aggressively down here because I didn't expect price to get back to my average so soon. And my average was right around $35 a share, so in this range. I had an order placed Sunday evening to trim just at break even, but then I recognized that the futures were down and that we'd likely be seeing a gap to the upside with the short positions. And so I adjusted my sell order. And so I wanted to go over, why I picked that level. And so the level that I did sell at was $39.69. So I didn't make a huge profit, but I did pretty nicely sell the top there. And so the reason why I picked $39.69, you might guess, just because 69 being kind of, a fun number. Also, I was thinking that we had these previous wick highs up here before we did turn down. Maybe that would be resistance again, also corresponding with $40 a share, that being a psychological level that might be acting as resistance. And then from this Fibonacci retracement, I have this 786 there at $40.19. And so, it's this confluence of levels, $40 being a psychological level, that corresponding with these highs here that were resistance in the past, could be resistance moving forward, and that's 786. And so I adjusted my sell from 35 to that level, took some profits during the pre-market, actually closed my position during the pre-market, and then price came down. So that was a beautifully executed panic sell, taking profits here. And, I was able to add to my other long positions on that dip. So that was pretty nice. And so, one reason why I was looking for 35, to break even is because the golden pocket here from the 618 up to the 65% retracement from 35.39 up to 36.30. But, I could have, not sold at right around 40, and I'd still be right around my average, but now I would be negative. And so what are levels to the downside that I think are good to add to? So just like with the SPY and the SPXU, I've identified some gaps to the downside that could be some nice fill levels, one being 28.46, which was the closing price from August 1st. Another gap to the downside is 22.60 which was the closing price on July 23rd. And then finally, one at the near the very bottom is at 18.79, which was the closing price on July 16th. So these gaps don't necessarily need to be filled, but I do think waiting for right around $29, $28 could be a great time to start adding back in, building a short position on semiconductors. And I do think that price will be coming down with SOXS. And so I do think it's going to be a good time to average in at these gap levels. But I don't think that price will be coming back to these all-time lows for the SOXS. And I don't have it up here, but I am going to add Nvidia because, with this being said, excuse the drawings. I don't think that we're coming back to the all-time highs of 140.67. We did get, an attempt to get back there, but these are dead cat bounces that we're seeing on the way down. But I do think that we could be seeing a rally specifically because of Nvidia. And one big reason for that, Jim Cramer has been bearish today, as of this morning, on Nvidia. How do you like the fact that Nvidia is now regarded as a fluke and AI as some sort of joke played on the markets with its ridiculous percentage gains? And so if he is now turning bearish on Nvidia, perhaps the top is not in. But of course, though, that is a joke. I don't think that we're going back to these all-time highs, but I do think that we will be bouncing, and we could be coming to a level of right around 120, going back to the lows over here. Although, we already kind of did that with this little bounce that we saw here. And so maybe the level that we're going to be bouncing to is around 110 to 120. I could see that being a top for Nvidia. And that could be corresponding with the gaps that I have drawn over here, representing great dip buying opportunities and opportunities to make money while everyone else is losing money, because it was a very nice experience to have that, this thesis that I've had over the course of the year. It's starting to play out. And so I think that this is a great way to hedge positions by shorting semiconductors with SOXS. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and take care.